Hello guys, Ali's here. Welcome to the first of the many videos on trading ideas. This is going to be the beginning of our fascinating journey together, and I promise you it's going to be the fulfilling one and the fascinating one, and you'll enjoy it along the way. My aim for these videos is simple. I'll show you my own approach to analysis and trading, whether I'm doing scalping, day trading, swing trading. I'll show you how do I find my setups, how do I trade them, and help you to trade better and become more profitable. So without further ado, let's get started after the intro. So before we begin guys, I have to tell you, if you are new to my channel, I should remind you that I use footprint chart plus the volume profile as my main style of trading. And I don't use those traditional indicators like moving averages, RSI, stochastics, things like that. And sometimes I refer to the concepts of the supply and demand, ICT, smart money, liquidity, and things like that. I refer to those concepts, but the main focus is going to be on the footprint chart and volume analysis. So let's begin this first video with the Ethereum chart on Binance Future. One note before we continue. If you are using different exchange, I'm using Binance. So if you're, for example, using Bybit, make sure you check the chart for Bybit Future. Okay, because the information that is rendered by the volume chart is going to be different on Binance and the Bybit or any other exchanges out there. So make sure you do actually bring the chart that belongs to this same exchange that you are trading. That way you get the most accurate information. Mine is going to be the Binance 5-minute chart on future contracts. Okay, here's the Ethereum. Now if you look at the chart here, you will see this area of a blue and gray, and it happens on daily basis, and we call this histogram a volume profile. And each volume belongs to a particular day. For example, this is today's volume profile, and this was yesterday's and the day before that. Okay, now each volume profile histogram has two areas, a gray area and blue area. By default, the software shows the whole thing in blue. I've changed the color back into blue and gray, which makes it easy to differentiate the different parts of the histogram. Okay, so the gray area is called the value area, and is the area where the most trading happened. Okay, and is the 70% of the volume which took place on that particular session. It could be a daily session, a weekly session. It depends on the type of a trading you do, and for me it's going to be the daily. And so this gray area has the most trading happened in this gray area. Now if you look at the yesterday's area, you could see that it was actually, the shape was different and the gray area was in the middle. You could see that. So it depends on the distribution of the volume and how the price moved, okay, and how it was volume distributed, okay, on that day, and this shape, okay, changes. Okay, let's continue. Now you could the Ethereum chart was actually selling off for 4 days in a row. After that, 2 days of consolidation, okay, and today it rallied back up. Okay, now so how do I trade Ethereum today, and what are the probable future trades for this one? Okay, here is how we can get a good scalp on this one. Now if you look here, this was the yesterday's high, and the price today was able to break to the yesterday's high with an aggressive move upward, and after breaking out of this area, which is the high of this high of yesterday, it didn't really get back to this area, so it didn't retrace all the way back to this area. But this reminds me that this movement is solid. Probably there is some force behind it, okay, because if it was a fake move, the price would have just retraced back to it really quickly. Okay, so it managed to stay up there, and then in a couple hours it went into consolidation and finally another breakout to the upward. So I'm gonna mark this area too. Now what happened is that after breaking out this area and confirming that it's going to be a solid area, okay, what I did, I marked this area, okay, this area here between these two horizontal black lines, and I confirmed it with another thing here. If you look at the candle, this breakout candle, you could see there are some green areas on this candle. These green areas are called imbalances, and these imbalances basically tells us that there were too many aggressive buyers. Because it is green, it's an aggressive buyers, means that the buyers took everything from those sell limit orders. The sell limit order just gave them they put sell orders in front of the buyers, and the buyer just pushed the buy button. They just pushed it too quickly, too many times, okay. They ate every sell limit orders, and they managed to close the price really up there. And after that, there was another movement to the upside, okay. So this area of a green, okay, is interesting to me because it's an area where lots of buyers went into the market, and it could be a what we call in traditional technical analysis is a support area. We could call this area as a support area, and the next time price revisits this area, we could really buy. You can see that's the price got back here, revisited this area. So what I did is that I confirmed this area of a demand which I had here, okay, with this stacked imbalance, okay. And along with this stacked imbalance, I have another thing which is interesting. If you look at here, this is the high node here, high value area here. I have an HVN, although it's not inside this value area, but it is still is a high value node, and it's another factor to my analysis, and it gives me much more confidence that this area going to be a successful area, okay, to buy from it. So that happens next time the price comes back here. You can see the reaction is fascinating, and the price just reacts and goes back up quickly. So this is the first time reaction. We have this area. This could be the second time reaction back. This area is going to be a quick scalping trade for those of you at home which are interested in scalping, okay. This could be the second chance to scalp this area, okay. But because it's going to be the second time, I cannot just go long around this area. I have to confirm it, okay, with the footprint chart, okay, information that is given to me, okay. So how do I get that information? What things I need to look at it, okay. So one of the things that you could look at, okay, let me explain that by actually going through this example. You could see that we had a demand area here, right? Okay, the price got back here and reacted to this demand area, went up. So let's check that what did we really have on that demand area, and what really happened here. So let's look at it. So the price was selling off really aggressively here, and looking at this area, as soon as the price reached this demand area, this blue area, things got changed, okay. Most of the thing here is red, okay. Look at it. The most of the thing here is red, and despite being red, the candle closes positive. So we have too many sellers here on this candle, but the price is still closes positive, okay. So this tells me that there is some responsive buying happening in the market. There are more buyers than sellers, and that's why the price closed positive despite huge selling off. And this is a sign that the market might willing to go higher, and that happens. Next candle opens a little bit higher, ticks higher, and after a little bit of consolidating, market goes back up again. So if you had taken this trade, okay, you would have get a 1-to-1 risk reward ratio already on this one, probably 1-to-1, yeah, 1-to-1, yes. So this is how it's traded. So next time the price comes here to this demand area down here, which is the second time, okay, you could check for the same thing that happened here. Okay, the price gets here. Despite huge selling off, you see the candle close positive, which shows lack of selling and interest of buyers, which is a responsive buying, and they're willing to take the price higher. So you enter the long and put this stop loss just here and go up with the market, okay. That's one of the things that you could look for it, okay. And there are many other clues on the footprint chart, okay, which I will explain them in other videos for other trading ideas, but that's one of the things that you could always look at it. Before we wrap up this video, there is another question that might pop into your mind, and that is, why didn't I choose this area as a buy area? Okay, and despite the breakout from this area, the answer is simple. I need to see a follow through. Remember that if there is a breakout of some level, you need to see a follow through. If there is no follow through, price retracing quickly back, it means that that movement was not legit, or there is a huge force in opposite direction that the current movement is not able to withstand it. And that's the thing, okay, you have to pay attention. That's a problem. Most people get stopped out and they blame the market for it, and that's not the case. The case is that the market, like the movement, is not legit. There is no substantial force behind it. How do I confirm it? It's so simple. Look at it. The market started rallying up here, all the way up here, and the next candle is starting selling up. Okay, the next candle continues selling up. The next candle it's coming down too quickly. I mean, it should not happen like that. I mean, it's a legit move. Okay, continue, go up. Let's stay there for example, another hour. Okay, just don't come back down quickly. Okay, it doesn't make sense. But look at this movement. The price breaks out, one candle, it stays up there. The second, boom, tries to go up. The third candle, again, stays up there. Fourth candle, it stays up there. Fifth candle, sixth candle, seventh, it just stays up there. And then another breakout. So this movement is much more legit to me than this one. Okay, and that's why I selected this demand level rather than this one. So make sure you always pay attention to this stuff. Okay, don't just choose an area, okay, because there wasn't a breakout of that area. Okay, make sure there's a follow through. You see another example here. There's a breakout of this area, but there's a follow through. One candle, two candle, three candle, four candle, five candle in a row. The market goes up and then comes back down to this level. There's a reaction to this level. It's a small reaction, but indeed you have it. Okay, you have the reaction. You got what you were looking for. Okay, you need to have to follow through. You need to see the follow through in the market, and that's the most legit thing. So let's do a recap. We have this area. Okay, I chose this area. If the price comes back to this area, I confirm it in the footprint chart. If it is okay, I go long from this area. Okay, and if it's not okay, then the market will basically go to this area and no trade will happen. Thank you guys for watching. I hope it was informative, and make sure you watch this area carefully, because next time it could be another profitable trade.